Hello traders, welcome to Highest Forex. I am Highest Zider. This is where we guide traders from foundations to freedom. In this video we'll talk about using our strategy, or the falcon strategy, as you all know, to trade just 2 time frames. This is a request from our premium community. A student of ours asked if we can use the strategy on 2 time frames instead of working down the time frames from the 24-hour till the whatever entry time frame you use. So now, before we jump into the video, if you are new to this channel, please subscribe. If you like our content, always remember to give us a thumbs up and don't forget to comment. Let's get started. So like you can see here, I'll be using this indexes and pairs to explain the chart, explain how you can use 2 time frames to, or use the falcon strategy on 2 time frames to get entries. Literally the falcon strategy, you just need to use the time frame, the higher time frames, to understand the bias of the market, so that each time you trade with the market makers, right? So it's literally the same thing. If you decide to not go to the 24-hour or not go to the weekly time frame, whatever time frame you pick as your higher time frame, every time frame is a higher time frame because it's higher than some other time frame, even down to the 1 minute. Because if you use the trading view, you can see very well that they have seconds time frames, right? So if you, whatever time frame you choose to be your directional bias time frame, is the time frame you're going to ride with. But one thing about trading with the falcon community is, because why we do the top down, is because when you read deep into the market, the higher the time frame you go, the more information you get. You understand? When you break it down, you get to understand more of what is really going on. You get to understand more of what is really going on. If you just, that's why it's mostly said that the swingers are more profitable or have more money than the scalpers, because scalping is, get in, get out. If you're not really used to it, or you're not, experienced trader, it will be kind of difficult for you. So for this, I'm going to stick to the 1 hour, and then I'll use the 15 minutes as the entry confirmation time frame. You can see we have USDCAD, like the list I showed you. We're going to do the VIX 200 spot, the VIX 10 spot, and then 75 spot. Then we do USDCAD and US30, and then NZDCAD. So currently we have USDCAD on our chart. Now, like I always say to you guys, whenever you approach the market or you come to the chart, the number one thing you look for is the highest high and then the lowest low of the current pattern in the market. The current pattern, right? So it is the same kind of rules. Those rules I always repeat in my channel. Watch my videos and get to understand them. Those rules I always repeat in my channel. Those things I've taught you guys, those of you in the premium community, it's the same stuff, the same kind of thing we come to the chart to implement every day. You understand? So no matter the time frame, so choosing the time frame to be your directional bias is your own. It depends on you. If I want to use the 4 hour as my directional bias, it's literally on me. If I want to use the 1 hour, it's on me. But I want you to understand that yes, you can use 2 time frames. You can even decide to use 1 time frame. Since you understand directional bias, you can take entry with that. But I don't advise that, because I always like to, I'm a conservative trader. I like to get a lesser risk in my trades, and then I like to make sure that my analysis is 100. It's kind of, I'm really sure and convinced before I get in. So for this, like I said, mark the highest point and the lowest point of the current correction you see, or the current pattern you want to work with. So I'm marking this highest high, and then looking for the lowest low. I want to go a little bit to the left. So I'm marking this as my lowest low, because this is kind of like the current pattern of the current position of the market, right? So I don't want to mark that. I want to.
It's 7 o'clock.
Thank you, Samantha. I want to use something else, you see. So from the reason why I mark this as my highest high is because I'm catering for this impulse. I count this as an impulse, right? This is a bearish run to the downside, and then afterwards market starts, to and fro, correcting. So where I want to mark my trend line is this. From here, at first it was here, and then to this end, right? That is my trend line. I have 1, 2, and then 3. This is out of the trend line, but I'll get to explain further for you guys. Then I have to connect the supportive trend line each time I have a resistive one, right? You see, so this is why, one of the reasons why I mark this as my lowest point, because I know the market has to still keep falling. So because my trend line is intercepting, I also want to move my lowest point to, let's say, here. This is a significant low because I know we need a third touch on this trend line. So I want to cater for that. I want the market to be, have enough breathing space to come to the trend line there. So the reason why I said I'll talk about this later is, let's go to the chart more and then you see. So when I have this set up on, let's say the market was here. Sorry, I didn't activate the playback, so we just do it manually. So let's say the market was somewhere here, right? And then I have this 1 2 and then 1 2 at the supportive trend line and this at the resistive trend line. How would I have taken my trades here? Now already, like I said, the higher time frame you choose is going to be your directional bias time frame, right? So this 1 hour is my directional bias. So if I was here or anywhere in the market, I know whenever the market hit the third touch, we look for sales, right? And then our target is definitely here, right? So when, like I said, I'm going to combine 2 time frames because that was the request I had. So went from the 1 hour, I'll go to the 15 minutes, and also the past chart. I will also explain to you guys how those entries were taken using just 2 time frames. So let me explain this first for you guys. Let me explain this. When you have this, it will be like 1 2 touches, right? That's where you connect your trend line initially. Then after that, you have your real line here. Then what will be next is for you to, you have an impulse, and this is correcting to the upside. So you start correcting these trends within within your little downtrend or within your downtrend that was initially forming. So you have it like this, right? You had it like this. Then when you come to the third touch of it, you see we broke impulsively out of it, and then we had a little bit of correction. But instead of continuation to the upside, you already know from the onset that this was an impulse to the downside. So we should get an impulse to the downside because it was like an impulse, a correction, and then a continuation. So from there, I personally have to see what is playing around here. Then from there, you see clearly you can, adjust this trend line to the backside, and then you can connect these guys. Or is it like this? Yeah, you can connect these guys like this. You see very well that yes, we have a bearish pattern at the break. That is literally what is happening at the other ends as well, or what happened at the other end. That's why I fell. But your directional bias has to be, you have to bear that in mind, because directional bias on all of this is that we need to keep selling. But we broke above this. This is what a dump forex falcon trader will tell you. After the break, you have to continue upward. But if you understand depth into the falcon strategy, you have to understand that the current patterns have the current patterns have the highest probability of playing out. So even if the past is telling you stuff, you have to look at what the current pattern is saying. You see, the current pattern, we're having this expanding kind of setup. So we immediately hit the channel, this third touch of this, because we have 1, we have 2, and then we have the third touch of this my ascending trend line here. We have it like this. Then the reason why I exempted this is because this is an impulse. In my community, I let them understand this, what is called impulsive correction. This is an impulsive correction because we have an impulse, we have another impulse before it starts to correct. So it's called impulsive correction. So from the impulsive correction, we have 1 touch, we have the second one, then we have the third one. On the third touch, what we have? We have what? A rejection candle. You see the shooting star or whatever. What's it called? Yeah, bearish pin. You see a rejection candle from there. So literally, if you watch the last video I saw, the video on boom and crash, that's how we take the entry. When it closed, then we take our entry at the top, of it, and then stop loss. You have to target where your analysis tell you that that's where the market is going to fall to. Me personally, if I had this, I'll target this low, because this was the low that originated this move. So I'll target this low, which is 1:8. You see, it was a nice trade, no stress. Then let's talk about the current ends of the market. Right now, this has formed, so the trend line is well connected, and then the market was approaching here. When the market is approaching there, you have to understand the scenario of trends in trends. You understand? Inside your bigger trends, whatever trend you choose to be your bigger trends, there are trends within them. So you have to understand how the market broke the trend line. You see, the market was breaking the trend line correctively. It wasn't a high momentum break. So that time you have to understand that you need to connect those trend lines. You need to connect those weak momentum candles to each other with your trend line. You need to connect them. Then you see, like you see, this is like multiple touches, but this is kind of looking like the significant third touch of the trend line. Then you see rejection candles. Then it's a sell. it's time for you to sell. That, like I said, I can't teach you guys uh, the other entry criteria we have in our community, but because I teach the rejection candle criteria on here on YouTube, it is definitely a sell for you guys. You can understand already that you have to sell, and then you target this third touch of the trend line, which you see the trade is still in profit, and that's kind of like 20 ratio 23 24. You see, it's a lot of money, it's a lot of win. Currently it's running 18. That's a lot of win already if you understand how to use just two time frames for your the first time frame for your direction, the second time frame for your entry. Then knowing in depth the pattern trading, you have to understand that the current pattern has the high probability of playing out. So even if we know that when a break out of a trend line like this, we have to be looking for continuation to that way. You have to understand the current pattern of the trend line to the current thing on the chart. That's where you deal with. So that is why this sell was valid, even if it broke out of the trend line. It broke correctively, and then we had, you see, like I said, which of the some of my videos, I'll tell you guys, when you have a running channel, that means the momentum of that direction is weak. When you have an impulse to the upside, and then you're having a correction to the same direction, the momentum to that direction is very, very weak. So the selling is is very, very very possible to happen. Now, if you in the premium tool, you understand that we had a very tight entry here, because when you go down to the time frames or how we do it, you can see we broke this low and then we pull back. You see, so that's how it works. You can use two time frames for your entries, just the first one for your direction, the second one for your entry, and then whichever entry criteria you use is what you use to take the entry. But most time when I do that two time frame thing, I make sure my entry criteria is the what's the code, the rejection candle entries. So next on our list we have, let's do the US 30, so you get to understand US 30. I hope my network is not going to bother me. US 30. So doing only two time frames, that is why we are actually making this all. That's why we are on here right now. Two time frames. Each time you come, no matter the time frame, you can do whatever you want to do on it. Each time, like I said, each time you go on the chart, you look for what the current pattern you want to focus on. There's no rule that you have to focus on this or that. It is all depending on you, the current you want to focus on. If I look at this is a current pattern. The whole of this is a current pattern. You see, we're having a run channel to the upside. If I even want to dive into the current pattern we have, the whole of this is a current pattern. If I still decide to dive deeper into the current pattern, the whole of this guy is a current pattern. I think that's where we're going to focus. Let's focus on the current pattern, because when you do the kind of trade that was this type of trade, you are kind of scalping. You see, you are scalping. So let's do that. We have this impulse right to the upside. Then this is the beginning of the correction. So I have my read there, and then the current side is actually running. So I'll put my highest point maybe at this week, because this is the highest high since the whole of this started. Since the market started giving us this move to the upside, then this is what I mark on the highest time frame I want to look at. If I see patterns visible enough for me to mark up my patterns, I will. But if I see the patterns are not visible enough, I switch down the other time frame, then I go in, then I use it. Let's go to the 15 minutes, which is also our entry time frame, because of the type of trading we are doing. Then we can map our trend lines and see how it goes. Now clearly you see this, we have this, you can connect this low and this low, right? Then we have this. Now a lot of you want to connect this highs and this low, you see, but I won't do that because I understand the fact of impulsive corrections. So I'm going to connect this, I'm going to connect this like this, and that is literally why the market is still battling to the upside, instead of drawing it 1 2 here and then wanting the market to drop. You see, the market is still battling to that touch before we look for the sells. Now let's explain why the market sold earlier. Now when you're on the 15 minutes, what you do is just trying to look for confirmations for you to enter, because we are doing the two time frame kind of entry, 1 hour direction, 15 minutes entry. So you have this, you see these trends within the trend, it's kind of running to the upside, and then the other side has it already. But if you want to do that, if you want to make it more simple or clear, you can do it like this. But this is accurate because this little one was an uptrend, an impulse, and then this is the correction. So when you are on the trend, you see you are laying on the trend line, and then on the smaller trend you have this kind of, you see, when I say running channel, you see another impulse to the upside, and then the market started fading to the same direction. So when you have a lot of touches in it, what you do is look for a bearish confirmation candle for you to sell. Now you see this candle, we ran to the downside first, then it kind of reacted back to close. Then the next candle after it, if you combine the two of them, it is called pregnancy candle, right? And a pregnancy candle is a sell bias, it's a sell confirmation candle. So I put my sell immediately the candle closes, and then my stop loss at the top of it, top of the candle. Now, yeah, the stop loss was hit, but when you understand trade management, like like you, if you are in the premium, I already thought that if you understand trade management, the stop loss won't be hit because you understand that when you break a significant low, you have to move your trade to break even. So your trade, after breaking this low, this candle, your trade was supposed to come to this. Your stop loss you're supposed to be, stop to zero, or maybe try to modify a little to lock a little profit for yourself in case it reverses, because this is a significant low. You understand? So that is why the sell happened there, and that's how to combine it. You see, we had highs and lows from the 1 hour, and then we came here to filter an entry. Yeah, the market wasn't having that the other trend line exactly to, like, let's say when the market was moving around this end, the trend line basically will be here. It will be just one touch and then second touch, right? But what will make me take the trade is the fact that I understand that this is a running channel. The market has this, you see. So this is why I'll take the trade when I have this kind of broke below it, came back inside, and we have this candle. This candle is the main confirmation for me if I'm doing the 2 time frame. Like, when you don't follow the laid down path, and when you try to get you a shortcut, it's always risky. Shortcuts are risky. That is let's say that is life itself. When you look for shortcuts, it is always risky. So you understand that trading 2 time frame is a risky kind of trade. So you have to be quick, you have to be smart enough, you have to make sure you're not uh greedy. Whatever little profit you have, take it, because definitely, since you don't want to swing your trade or you want to day trade it for a long time, you definitely won't make a lot of money. So you have to also adjust your strategy, psychology to this kind of trading, this kind of stuff. You have to adjust your psychology to it, because normally when traders take trade like this, when they take sell like this, and then the market is running, it's not every trader I tell you when it breaks a low go to break even. No, almost everybody just have it there and then have it at the target, and that's it. Nobody tell you go to break even. But because I understand that when you are doing this kind of trading, it's a risky one. You have to always break a significant point and then go to break even. So you also have that kind of mindset in you, and also try to, if you are doing this kind of trading, try to make sure your psychology is clean, because if you take break even, you might be mad, because a lot of new traders, this is why I warned you guys in one of the video that instead of looking for strategy that will pay you this or pay you that in a jiffy, try to get you a strategy that can beat the market in whatever way the market wants to be beaten, or in whatever way the market is talking to you. You can be able to interpret the market. You understand? So this is how I will look at US 30, and then uh because of what is currently happening on US 30, where I'll be looking to sell is whatever the market gives me information here, because this is going to be the third touch of my expanding structure. It's not the third touch, sorry. This is going to be another touch on my expanding structure, because it's not a third touch because it has not come back to test the supportive trend line. It only came halfway and then went back up. So the whole of this, if it touches here, I'll say count it. It's a count touch. You understand? So that is how I look at the 2 time frame trading. And let me show you another thing why I don't do 2 time frame alone, because the more, like I said, the more you walk into the chart, the more of the chart you read, the more you get better information, right? If I was trying to mark out these patterns, you see, this place is kind of telling us that the market has to go further to the upside. You see that the market has to go further to the upside. So if I was doing my 2 time frame thing, I won't even sell here. Instead, I'll be looking for buys. I took this buy, I hold it to this end. That means the market is coming here. So that means whatever you see, what the market was telling you here is kind of is maybe, yeah, it's going to be respected, but not as long as it's supposed to be, because the market has to battle up to come here before we start looking for significant sell. And this for me is going to be a better selling point, because liquidity will be swept here for equal highs, people trading support and resistance, people trading double tops. Liquidity will be swept, and then we'll have a third touch rejection, and then we'll look for sell. You see that? So yeah, it's possible to trade two time frames to analyze the market and make it, but try to follow the laid down rules of the strategy, which is rolling from the 24-hour or from the weekly till the entry time frame, instead of trying to do 2 hours or instead of trying to do two time frames. So let's say before you do this, please make sure you are really good in using the strategy before you try to you know drift it to the way you want to do it. Like I said, it will always respect when the market reach any level. It always respect. See, it's kind of already giving you respect. It's already respecting that third touch there, but it won't be enough. It will just fail a little and then come back here, find its way to this place. So let's talk about the next thing is NZD right? NZDCAD, sorry. NZD Canadian dollar. Sorry. Card. NZDCAD. We still have the VIX to work on. I think the VIX, I'm only going to talk about is it the VIX 10, or I'm going to talk about just one of it, not to make this video too long for you guys. I'll talk about just one of the VIX, and then try to use what you have learned from this video to work on the remaining two. I think we will do the any of the VIX. If I just go my chart and then any of the VIX, then please try to implement this on the rest of the VIX, and then drop your comment how it went, how it's going. And I think I had an analysis for this guy. Me basically, I don't do a two time frame thing. I like to break it down from the higher time frame so I can understand more. So two time frame, you have this. Let's work with the current one, right? Two time frame, we have this impulse correction to the upside. So if you are working with two time frame, you'll be looking for sales to this guy. So yeah, that's what is happening right now. What you should be looking for is the sell to this one. So you just go to the 15 minutes and then you look for your sell. Let's see, let's clean this because I see there's a lot of updates. Now if I was doing the two time frame, this would have been my highest high, right? Because this is the 1 hour we decided to start using, and then this will be my lowest low. And now have this pattern 1 2. I'm actually doing this video outdoor, so please don't mind the noise in my environment. All right, this is 1 2, and then this is 1 2. So we have this channel as our directional channel in show this 15 minutes. Oh, that was 15 minutes. Shit. Alright, yeah, we are trying to explain two time frames. I'm not trying to explain 1 hour 15 minutes, you understand? We're trying to explain two time frame strategy using the falcon strategy, right? So yeah, it works. So let's go back to 15 minutes. That is the one we choose to be directional bias. To be a scalper, you have to be a pro because it needs a lot of psychological moves, So we rejected here, and then we're targeting where? Targeting there. Targeting the third touch before we look for sales. After this third touch, the possible selling will be targeted to the 90%. So if I was on this chart, how would I have gotten the entry? I therefore will, because this is the directional bias time frame. Because this is the directional bias time frame, then we go to a lower one for the entry, which is the 5 minutes, right? Then I'll show you how I would have gotten the entry for this. Clearly you can see we have this 1 2 3. See that? And I will not put the trend line there. I'll just put the ray. If I was like the market was approaching it, I'll just put the ray, and then you see clearly that we had a pregnancy candle as well. There's the two of them, this guy and this. So this is a pregnancy candle on the running channel, the third touch automatically, and then after it I place my buy and then my stop below it. So that is how I would have taken the buy here. Is it there? Yeah, it's there. Buy the stops below the pattern, stop below the pattern, lowest low, and then targeting. I know it's 90%, that's where I target. Sorry, I know it's the next trend line, so I'll be targeting there, which is 23 reward, risk to reward, and then it's already running 12. So that's what I'll be targeting if I was to take the entry there. And if I was to take this entry here, yeah, because this trend line, this candle has to reject here first before we, connect these two. I would add the trends within the trends, which is this 1, 2, 3, you see, and the supportive side, which is like this. So I had the trend within the trend, which when it comes here, I will use, you see, 2 and then 3. I had the shooting star. So is that, yeah, that's the shooting star. And then sell. I know when I sell, I'm targeting the 90s, right? This is where the problem comes when you trade uh 2 time frame and then you like to only analyze a smaller time frame for scalp. This is where the problem comes, because with the law we know when it breaks targeting the 90s, right? But well, I teach to my students, when you break significant levels, please lock your profit, or you take partials, or you take go to break even with your trades. You see that? So if you were just under, if you just watch the Falcon whatever video, you are not into a community to understand the more or in depth of what you're supposed to understand. You definitely will be looking for 90s, and then it will just play, and then now it's very very close to your break even or your stop loss. But each time you break a significant level in the market, you have to take partial of your profit. Please note that you have to take partial of the profit. So when you break this guy, you have to know that, yeah, something can happen, because you broke this one, you even broke this guy. A lot of places you broke this, so you are supposed to, you know, like I said in the previous video, update your analysis all the time. Try to update them. So I have the sell there, and I would have taken the sell here. Also running channel, you see, 1, 2, 3, and 1, 2, 3, and then we have what, bearish pregnancy candle type. You see, this is bigger than this, so it's a bearish confirmation for sales. So that's how it is. And let's go to look at VIX, volatility index traders. Okay, we have the VIX 10. Like I said, I'll do only one of this, and then I'll leave the rest for you guys. Please try to go on them and drop your comment in the section below how you see it. Don't forget to subscribe to our channel. Alright, this is the VIX 10, and then I'm still on the 1 hour. Actually, uh, I'm actually using the 1 hour and the 15 minutes for the entry, because the Jackson, he said that was the time frames he used, right? 15 minutes for entry, the 1 hour for direction. So that's why I'm kind of using them. But you can combine any 2 time frames. One will be your directional bias, the other one will be your entry. So clearly I can see on the chart I have this impulse right to the downside. I call it an impulse because I have a bigger correction in front of it. So this I have marked as my highest point, and I have this as my lowest point for now. Or let's see, when the market wasn't there yet, I have somewhere significant close to it. Let's put this as my lowest point. So you already understand, when I mark the highest point, you know that, yeah, there's the trend or a structure between them. So 1, 2, 3, or 1, 2, I have that structure, and then I have this structure here too, right? I have this structure here. So when the market was, let's say, this already 1, 2 connected the trend line, and then 1, 2 connected the trend line. When the market was approaching here, why would I have sold? I see trends in trends. I see this guy 1, 2, 3. I see it 1, 2, 3, and then I have this supporting 1 to 8. So I knew when the market approached here, we have to sell, and you can see clearly the rejection candle we had there. And if you also want to still, okay, let's go the 15 minute, which is supposed to be the entry time frame. You can see we are having some kind of running channel to the upside too before the shooting star. Okay, so it's a very very confirmed entry, a very very confirmed entry, very 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 confirmed entry. You can see we had this right. At first I'll have it like this, you see, then I have to evolve because the market is going, so I have to evolve it to this, and then this. I always like to cater for the current path. The two current touches are my focus, understand? So here 1, 2. So when I have this, I know that, yeah, we have to drop, because even if we don't drop far, we have to come back to support the market with this trend line before we go back further to the upside. Then if you are in the community, you can see clearly we had a very perfect entry here. We broke this low and then we pulled back and we did our thing. If you even went to the entry time frames we used, you can see a very tight entry there. So for us talking about this now, we have one, two, and then a third touch. After that, you see a bearish candle confirmation, and then you put your sells. You sell right there, and then you stop right above the candle, which gives you the signal. And then you know very well that we already connected these two, so we are targeting the third touch of the trend line, which actually is a win. You see, the market came to it before we start to go back up, and when the market approached the third touch of the trend line, because we are using 15 minutes for our entries, we know since we hit the third touch, we have to go back, you understand, to the trend line. Not the third touch though. Since we hit the trend line, we have to go back to the other side until we have a first trend line that gives us 3 touches, and then we look for a breakout, right? So when we are on the 15 minute, because you already have analyzed your direction from the 1 hour, which is this guy and this guy, the more the 15 minutes right, try to always update them. Updating the 15 minute, we can see we had a bearish running channel to the downside. You see we have a bearish running channel to the downside, which actually gave us the buy signal as well. You see that is bullish rejection. You see, so that was the buy signal call. You have the sell, the buy at the bottom of the close, and then the open of the other one, the next candle after it, stop right below it, and then target to the other trend line. So you see, man, we kill this market because we understand it. You have to learn to understand the market. You understand? Learn to not want a strategy that will just pay you. Don't chase the money in this. Chase the knowledge. That's it. Just chase the knowledge. Chase the understanding. Make sure that whenever you are called for anything concerning these charts, you can stand out. Whatever you are being asked, you can. You understand? That is the main thing. I know that here there are pressure for money. We need money. But bro, if you put that pressure into this market, you quit. Definitely. You quit because you bleed and then you get tired. Drop those accounts you wanting to flip. Drop those money you want to make. Understand how these candlesticks work. It is only the candlesticks that will provide you the money. No matter the prayers you do, if you get this thing wrong, you will lose. Yeah. No matter the prayers you do. So please try to backtest whatever you have learned. Don't just implement them on your chart because you see how easy I'm doing it. It's because I worked hard for it. That's why I can do it as easy and flash as you can see it. So you have to also put them into practice before you do. Don't buy signals, bro. It will never make you an independent trader. You won't be free. Each time you make money from the market, you have to understand why you made it. Be proud of yourself that you did it. Each time you lose money, you have to learn from it. It's not buying signals and then somebody give you a signal, it plays out, you praise him. It doesn't play out. You can't even tell why it didn't play out because you don't understand the market for yourself. Try to understand this thing. And thanks for watching.